Let's start off with your view on the market's activity we're seeing right now, because while AMCON brought with it initial optimism, that fast seems to have dissipated.
Well, Alishia, thank you for having me this morning. The market, has continued to go down as what we saw in Monday, Tuesday, and we lost about 0.67% of the all share index. The banking sectorial index fell about 1.55%. The only stock appreciating in the banking sector was Spring Bank. There was demand for it. The oil and gas also, there was a depreciation in the oil and gas sectorial index. However, the food and beverages, there was a small appreciation of about 0.87% because of the trade on Nestle. Nestle has continued to appreciate, over time because, the core investors, Nestle International, holds the substantial share in that stock. So that is what we have experienced, and I think the reason for that is because, nothing has happened post the announcement of the AMCON, the AMCON, valuation techniques that was announced by the board of AMCON after the meeting earlier this month. Well,
while we've really had the banking sector in the spotlight, I want to shift focus a bit today and look at some of the other companies that have making some news. Tiger Brands here in South Africa announcing yesterday that it intends to buy Nigerian food business UAC. It's bought a 49% stake on that front. Market reaction pretty muted though. We had UAC little changed yesterday, but outperforming the negative performance we saw on the NSE. Your view on that tie-up that's happened?
Well, the 49% buying into the company that will be spun off by UAC, post their AGM on the 17th of December, I think is a fantastic development, to the Nigerian market. UAC, you would see that, after that announcement, there was about 1.08%, appreciation in its share price yesterday, and that is to tell you that we believe that this acquisition of 49% by Tiger Brand into the UAC food that will be spun off post AGM is a welcome development, and we believe that the synergy from this company, UAC in its part, having over several years understood the Nigerian food and dairy business, to the minute details. They will bring that market knowledge into the synergy and into the joint venture, while Tiger Brand will bring efficiency in marketing and some technical partnership into the JV. Let's
explore the playing field. First of all, on the one hand, we've got a rising consumer market over in Nigeria, where the country boasts quite a healthy population. Let's take a look at that and what kind of demand these companies are catering to right now.
Okay. Nigeria is, arguably 140 to 150 million, population in terms of its people. The working class is about 65 million, people of the working age. And, some statistics has it that about 30 to 40 million Nigeria are actively working. I mean, if you look at the spending power of this population is actually absolutely massive. And if you look at, the wide range of, consumer items from water to fast food and everything, you see that the companies in this sector of the economy, food and beverages, they were immune against, the fall that we saw from 2008 till date. For example, if you look at the AMCON bill and the pricing that, the board of AMCON announced that, they will price at, 60% premium above the 60-day average, for the time, prior to November 15, you see that if you look at the prices at 17th of January 2008 for Nestle Food, for example, to the price as at the 60-day average and 60% premium to that, it's about, if you bought Nestle in 2008, you'll be enjoying about 600%. So, I mean, it's a market that, it is out there for Tiger Brands and UAC to explore.
There have to be quite a few challenges, though, that this company is going to contend with, because despite that demand and that kind of dynamic presenting itself, we've had UAC itself struggling to fund off competition as well. So what are some of the risks or some of the challenges that this combined entity now faces?
Well, I think, the market participants are aware, they're fully aware of the potential of the market. And you see that, companies like Tantalizers, like Big Treats, and, other companies that sprung off, from indigenous players are beginning to gain grounds, and they're beginning to tap to the potentials. Now, you'll have challenges in that area because you don't have organized payment systems, you don't have an organized, access to the potential consumers of the item. So you have to do a lot of your business in cash, and the challenges that comes with moving cash around. But notwithstanding those challenges, the potentials in the market, and people who have continually invested in this market are now slowly beginning to gain the benefit of the investment.
Your top pick within the fast-moving consumer goods space right now?
Okay, consumer moving. My top picks?
Yes.
All right, Nestle, Cadbury, post, what has happened in Cadbury. Nestle, Cadbury, definitely by the time USC gets spun off, it will be listed in the food and beverages, subsector. So definitely the USC food, probably earlier next year as well.